Welcome to the weekly swing low. It's April 13th, 2025, and we have a daily swing low in place. We don't have a weekly yet. We're going to need that, obviously, to have a bottom, but we may have a bottom. At least we have the first ingredient we need to have a bottom, and that's important. Let's just be objective, not emotional. We'll go through our regular tickers. We'll start with SPY here. As I said, we have a daily swing low. So our last update was last weekend after this big red candle on Friday, and we ended up making a lower low on Monday. That was day 17 of the daily cycle, right? So this daily cycle topped out on day 8. That's this little doji candle up here. And so we this candle here made a low at 481.80 and it made a high at 523.17. That's where this red line is. And so we needed to cross above that line, above that level, so that this could become a swing low. Hopefully, as you're seeing these updates, you can see like visually now, right, that like once price traded above this line here, right, it just kind of leaves this low behind. So let's just talk about what happened exactly. So we made a lower low on Monday, but then price reversed, but then it reversed again, right? Like you have this upper wick. So price couldn't hold the gains. But this is a gigantic move from bottom to top. That's an 8.6% increase in just a single day for the entire index. Huge volatility. So then Tuesday, what do? We have a big old inside day. And hopefully, again, as you're watching this channel, you're starting to see this. Be objective. This candle, right, this big range, high of 523, as we said, low of 481. The next day, we actually made a slight higher high, just a slight one, and then we went red. And so the expectation, this was set up for a compound bearish outside candle. So when price makes a slight higher high and then goes red, so this was green at one point and then it went red, you'd expect the next candle to be something like that, right? Where you basically kind of finish the job, right? You make a lower low below here. This made a higher high. So these two candles together become a compound outside candle. Instead, we got the complete opposite. I mean, look at this rocket ship. And of course, there's a specific catalyst for this, the 90-day pause that was announced. The same way that, this big like gap down was because of the reciprocal tariffs that were announced, right? Like this was a big news related gap. This is a big news related massive rally. And notice what the rally did most importantly. A few things. There is a gap here from here to here. We just closed that gap with this rally, right? And equally important, we went well above, and most importantly, we went appreciably above this swing low level, kind of leaving it behind. And then what did we do the next day? We consolidated, right? Like this candle is just in the middle of this range. And that's where we still are right now, right? Like, so very simply, the range that we're in right now is a high of 548.62 and a low at 493.05. But I would say this swing low level, that 523.17, is really your bull bear line. Because once you're below that, you don't have a swing low anymore. And so your bottom is in jeopardy. But right now, we have the first ingredient for a low. The other thing to pay attention to is there's a gap from here to here. So that gap gets filled at 554.81. Right? So we had two gap downs consecutively. And so you could see a world where price trades all the way back up to there, maybe even back up to here before turning down. So it doesn't mean we're out of the woods here, but it's a question of, is the next 10% higher or lower, right? And like that's what we're trying to gauge. And so right now, again, we're just inside the range of this gigantic candle. And so really your most actionable thing is a Monday, a break above the high from Friday. And keep in mind, there was an announcement over the weekend that, or I think it was right after market closed, that there's going to be some, some exceptions to the tariffs, which are going to favor Apple, Dell, Nvidia, some other companies. So generally, that could lead to a big market rally and also just favor those specific companies. And so these levels are going to be important for you to watch for. On the weekly, what we need for like a weekly level low is something like this, right? Essentially, got to cross above 548.62 is the level on the weekly. So obviously that means the daily continues to hold and we get this upside move again above 548.62. And so that's what we'd be looking for next week, a close above that level. And this would be a crazy short weekly cycle at 12 weeks. But this was a 17% decline, and most of that happened in like 2 weeks. So the way to think about it is a massive enough price decline basically could negate the time needed, right? Like if it's a big enough decline in price, then it could be over in a short time, in the same way that, you could have a long drawn out thing that doesn't even decline for the same. I think we went down 17% top to bottom here. So just keep that in mind. This is, again, the count here is very irregular. So would it would also be irregular on the daily, right? That would make, if this is going to be if this ends up being our low on Monday, that's a low on day 17, which is, again, like a really short daily cycle. But again, with this kind of down move, maybe that's what you're getting. You're going to get. So we're going to watch for that. On the monthly candle goes green above 557. So right around the level of that gap fill, a little bit, a couple dollars above, and just look at it visually. I think this is important to just like take a step back. This could absolutely be a nice little long-term, or at the very least, a tradable low. Look at this massive wick. I mean, kind of similar to this. Obviously, this is green, but we've got a lot of month to trade. We can go green, right? We'd have to get above 557. All of a sudden, this goes from being a red hammer to a green hammer, which is massively bullish. Look at this thing. Again, just to like kind of map this out for you, the bull case here is that we're doing boop, 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 and we just kind of got this out of the way, right? And then we would be into price discovery. Obviously, it's only a 90-day pause on the tariff, so there's a lot of like fundamental reasons why we could continue to see weakness. So we don't want to get ahead of ourselves, but just look at the potential here. It's obviously right. It's obviously here. So let's talk through the other tickers, the specific levels. So QQQ swing low is active. The daily swing low is active above 443.14. And on the weekly, it's active. We would need to trade above 467.83 and close next week above there. That would give us a weekly swing low. Same setup here. I mean, again, just look at this visually, right? It may be that we got the decline over in a short amount of time because it was so extreme in terms of the percent. Like what was the drawdown for the Qs? Right. So we went down a quick 25%, right? Like that, maybe that's it, right? So that's the Qs, and the ratio of QQQ to SPY has a nice weekly swing low, which is a really good positive sign. You want to see the Qs outperforming SPY. That's generally what you see in a rally. And look at this nice little sort of a double bottom type situation here. Look at that, where it bottomed, right where it kind of held here. Very, 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 very promising. So that's QQQ. And what about the Dow? So the Dow swing low active above 392.21. And on the weekly, you need to trade above 407.79. The other thing to just keep in mind is at this point, like, let's just go back to SPY. You're like, again, for SPY, a trade below 523, that's your first kind of warning shot. And then I would say below there, price could consolidate all the way like above 509 and still remain bullish, because that would be inside the range of this candle. So keep that in mind. And for Qs, that level is 432, right? So you can get a little scary like flush and it could still be the bottom, right? For the Dow, that level is 384. All right, what about IWM? So IWM also, this is important. So IWM actually does not have a swing low active. IWM needs to trade above 190.25. So still about like almost $6 from here. If the market has bottomed, obviously it's going to get dragged up as well. And I would say right now, though, we're actually inside a smaller range with where the high is 185.48 and the low is 177, essentially, the range of this red candle. So again, everything did very similar things. In this case, QQQ is weaker, wasn't able to close above the high from the day that could mark the bottom. What about SMH? So, and for IWM, that weekly level needs to close above 192.11, and that would give us a swing low on the weekly. SMH. So for SMH, we do have a swing low in place, like the broader market, and that is active above 194.83. You want to stay above 189.04. That's the range of this red candle here. Again, it's the same pattern for all these things, just different levels. And on the weekly, you need to trade above 212.81. That gives you a nice little weekly swing. And remember, this one topped out back in July of 2024. So an even better candidate for a long-term bottom, because the decline has lasted actually for like 7-8 months, right? Not the shorter decline we had for the broader indices. Now, we're going to move on to some macro things like the Dixie. This thing has just been cascading lower. So on the weekly, here's a tough bit, right? Like, well, yeah, that's unlikely. It's unlikely that that's a weekly cycle low, right? Let me just map this out real quick. So our low is, so we are on week 28. So that's the good news, right? Like we've been declining, which is to say, not, I guess I won't say the good news. That's the bullish case in the sense that we've already been declining for so long that, now is maybe not the time that you want to get super bearish. Also keep in mind, look at that. We just broke below that really important low, the last weekly cycle low. So that means this is a failed weekly cycle, but also means this is where you might expect a little bit of a bounce, right? Even if we are going to continue lower, this is the kind of level where you might expect some kind of price reaction, and you're already seeing a little bit of that, little wick up. On the daily, this looks like day 23 in a cycle that topped out on day 11. This is your bottom for the markets, like this day on Monday. And you can see, of course, we continue to droop lower. This has been dropping with the market. So Dixie is super weak. But it's getting late in the weekly cycle, and it's already day 23 of a daily cycle. The previous daily cycle bottomed on day 32, and the one before that on day 34 for reference. So for Dixie, it needs to trade above 100.78 to give you a daily swing low. At this point, if it continues to make lower lows, that swing low level is going to be, that level is going to be lower because, imagine it makes another lower low on Monday, something like this. Then all of a sudden, the level that you have to climb above is the high of this, right? And then you make another lower low. So just keep that in mind that this is a dynamic thing. But like if it could trade above that on Monday, that would leave this behind as a swing low. And if you look at the monthly, this is where things get really interesting. You had this big top back in September 2022, which coincided with the bear market low. Not a surprise. That's generally kind of how it works. Inverse the bear market low for the broader indices. And then we've just been kind of consolidating here. This is you could almost think of this as a gigantic bear flag, right? And then we kind of broke above this high, right? And I drew this here because this is a swing high here, right? Below this low of 106.97. We're obviously way below that at this point. But this is a slight higher high above here, which theoretically you could think of as a potential false breakout. So price breaks above here but can't sustain it, and then we get a violent reaction to the other side. That said, we're now at the bottom of this range we've been trading in for more than a year, and so a few years actually, really. And so we could just as easily keep filling this out, right? Like there's no reason we have to fall out of the bottom. But if we do continue lower below this range, the next level I would expect is this low here. So 98.31. That's the Dixie. And most importantly, it has been correlated with the US 10-year, which is bouncing really strongly. So if we look at the weekly chart, similar to the Dixie, it's been in this weekly cycle decline that we've been tracking. But unlike the Dixie, we had a gigantic weekly candle, big reversal. These two candles are a compound bullish outside candle of all of this price action. I mean, look at these candles. If you combined this candle and then these four candles, so 5 weeks of price action was just erased by these two. So we made a dramatic lower low with this one this week, which flushed this low here, right? Imagine if you asked, the stops that were here, you churned here and then made a violent lower low, and then where does price end up? Back above these highs. I mean, geez, this looks like a weekly cycle low, right? Especially it's on week 28. The thing is, the previous weekly cycles top bottomed on week 38 and week 38. So you have to have your head on the swivel, like that. We're not necessarily out of the woods, but 28 weeks is a pretty that's a long enough rally, right? Like there's no, like, that is right, that is in the timing band. And so by closing, just to be clear, by closing above 4.26, that gave us the weekly swing, and we're obviously way above that. And so I would actually expect that there's going to be some price discovery in here. It's not unlike the pattern that you just saw, like on the daily chart, for example, for SPY, right? Like, you know, you get a gigantic candle, right? Like something like this, you're gonna get some price discovery probably inside, like versus price just continuing to like rocket ship up, and it could be totally healthy. But that means yields are moving back up, right? They seem to have bottomed, which is an important kind of macro thing. And if you look at this monthly chart, I talked about how this thing looks like it was trying to make a trip to 3.25. Look at what a difference a week makes, right? Like, look at this super bullish looking monthly candle. Now, the catch, we've got a lot of trading to do in April. So, like, this thing could flip flop again, right? Like, we're seeing just crazy bond market volatility. But right now, we've got a massive green hammer, or a beautiful green hammer that is also a bullish outside candle. Look, it made a lower low below this low, and then whoosh, so this looks like a gigantic bull flag, right? Like, versus something that was about to make a low here. Again, big difference a week makes. So that's Dixie. And just very tactically, looks like a new daily cycle. And this is day 5, right? Thinking about this, wow, that's a really doji candle. So you probably get some price discovery within the daily candle. So this daily candle on Friday was a high at 4.59 and a low at 4.39. So about a 20 basis point range. And so we're going to see which side it wants to break from. But the important thing is we're early in a new daily cycle, and it looks like this is a weekly cycle low. And so that means TBT should be doing really well, right? So you can see TBT, by closing above $34, made a weekly cycle low, or looks like it made a weekly cycle low. And for TBT, the low from Friday is $36 thereabouts. So a break below that and a recovery would be just an awesome entry. I'm going to be watching this one because, again, it looks like we got a weekly cycle low for yields. All right, let's move on to oil, and then we'll do gold and Bitcoin, and we'll close this thing out. All right, so for U.S. oil, we do not have a swing low yet. So this is a very similar position to IWM, interestingly enough, right? So this candle that potentially marks the bottom, in this case, this didn't happen until Wednesday. So the broader market tried to bottom on Monday. This thing continued to make lower lows. This was your Monday candle, right? It tried to bottom, but then it made a lower low on Tuesday. And then we have a bullish outside candle on Wednesday. Again, the same date that we get the 90-day pause. And so right now, you want to watch 58.79 to the downside. So that area could be your stop. And really, it's got to break out back above 63.30. That's the high from Thursday, this red candle. But we're set up for that right now. Like you see this, we're basically just consolidating inside this range. So that's oil. And that would also be a weekly cycle low potentially as well. So again, kind of mirroring the markets. I mean, look at this. We've been We broke down below this range, this shelf that we've had for a few years now, basically. And now it's reversing hard. This is like a textbook false breakdown kind of thing. On the weekly, needs to close above 63.87 to mark a weekly swing low, which again could be your weekly cycle low. I wouldn't get super excited though. There's no reason why this thing can't just keep sloshing around inside this range. But if one were inclined to be short here, I would be careful. Like, this is not the place that you'd be short, right? Like, you're looking at this chart. Again, after this collapse below here and now this massive wick, albeit this is a doji versus a hammer, but this is not where I would be short. Let's move on to TLT. TLT is now below 90. It looks like we've started our weekly cycle decline. Now remember, this looked like it was a weekly cycle decline back on week 7. We consolidated a little bit, little false breakdown, and then a move up. Now another move down. At this point, this was week 11. This big candle makes it very likely that was your weekly cycle low. So once it broke below $90.04, so that's the low for this candle, that made your weekly cycle low. That made it a weekly cycle low. The flip side, if we could recover that level, this could just become, what I call a little kind of palate cleanser. That said, that's unlikely in my opinion, just because if you think about how much of this rally was erased, like look at this rally and look where we've come down to, right? Like we're almost, and obviously we've bounced here, but this is not this is generally not what a healthy pullback looks like on a weekly chart, especially. And if we look at the daily, we are again trying to bounce here. That's that lower wick you see. So we had a green candle. It needs to close above 87.30 on Monday, and that would be a daily cycle low, or excuse me, that would be a daily swing low, which becomes a candidate for being a daily cycle low, right? Like, we'll have to see, and that would be positive for like the weekly cycle prospects, obviously. So that's TLT. All right, we're going to move on to Bitcoin, and then we're going to do gold and silver, and then we'll close this thing out. So Bitcoin also made a swing low also above the swing low from Monday. So for Bitcoin, above 81,223 marks a daily swing low. And we also have the potential for a weekly cycle low. So it did make a new lower low last week. And if it could trade above 86,000, that gives it a weekly swing low and a potential weekly cycle low kind of situation, and means the 4-year cycle high is probably still ahead of us. All right, let's move on to ETH. Similar, let's see what the level is for ETH. One needs to close next week above 1688 for a weekly swing. And for ETH is actually not, ETH actually does not have a daily swing low in place. It needs to close above it's that same level, that's 1688. So call it 1690 to give you a daily swing. And in this case, it would also cause a weekly swing as well. So that is ETH, much weaker than Bitcoin. That's nothing new. Let's move on to gold. Gold is hurtling towards the 8-year cycle high. It's now week 14. We talked about this in real time. Look at this. This looked like a very bearish setup, and we did end up getting a lower low. Thing is, we got a massive reversal. This is a big bullish outside weekly candle on week 14. And then if we look at the daily, after 3 strong daily candles like this, you would expect a pullback. The low from Friday is 31.75. So you want to watch that. But any kind of pullback that can hold above that level is very viable. This is potentially day 3 of a new daily cycle. Again, not super early in the weekly cycle, but also absolutely not late. So that's gold. And in terms of the 8-year cycle, we are on month 31. And keep in mind, the shortest rally for the 8-year cycle was 34 months. So we're definitely getting close, right? But again, doesn't mean we have to top on month 34. It's just kind of context. And for silver, that low from Friday is 30.92, and we have not quite made a weekly swing yet for silver. So, gold had a bullish outside candle for the weekly. For silver, we need next week to close above 32.30, and that would give us a swing on the weekly. And keep in mind for silver, we actually did break down below the previous weekly cycle low, so that's not auspicious. At the same time, like the flip side to that is that could be fuel for a really big rally. It's just a question of how sustainable it is. Definitely worth a long try though. And finally for GDX, same count, week 14. It's a bullish outside candle, but I would watch for a gap between 48.86 and 45.16. Nice little entry there if we can get some kind of gap fill. And finally, natural gas. Looks like it's still in weekly cycle decline. First step is a close above 357 to give you a daily swing low. And that's all we've got for today. Thanks for watching.